let's go in the Wayback Machine. 22 years. It's now 1996. New York, the Federal Reserve Bank of New York had two people do a research paper, Arthur Estrella and Frederick Mishkin. Many may know of both or one or the other, but the point is, Larry Kudlow and many have brought up that we're just looking at the wrong curve. And yes, the research that originally made the curve such an interesting predictor of recessions was 3 months to tens. What do you think of that and what the complexion of the curve is now and what it may be saying?
Well, I think a couple of things. First of all, I think Chairman Powell did a pretty good job yesterday talking about the yield curve and why the yield curve is flat. And he had a pretty good explanation of why the short end is where it is, because they're removing accommodation and they're adjusting that rate. Exactly why the long end is not moving is a bit of a mystery. And I think when that's the case, when you don't understand what the markets are telling you, you're not listening close enough. But certainly it means, number one, that the inflation premium has pretty well gone away. The markets do not anticipate that inflation will be anything other than under control.
Interesting. Now, policy in the past, inventory of treasuries and our central bank, and this afternoon we'll see what their balance sheet looks like, but many central banks, it all affects us in the same way. Do you think that's a distortion as well? Whether you look at 3-month or 2-year against tens, there's distortions on the curve.
Well, it clearly is, because with the accommodation that took place, there's no question but what the Fed's going into the marketplace and buying all of the short-term treasuries had a distortive impact on the marketplace. And that's one of the reasons I think that the removal of accommodation over a period of time has to be done gradually and consistently, because it's going to be important to see how the markets react to that.
Excellent. Now, Jay Powell, I think his pragmatism is just so refreshing. He had some bullet points in some of his talks over both sides of the aisle, Monday, Tuesday, and Wednesday. And one thing caught my eye. He said that the U.S. economy needs to grow faster than debt. And all I could think of was, is that really the dynamic, or is the dynamic that the U.S. economy needs to grow faster than Congress spends? And I really think it's an important distinction as we continue to try to handicap whether tax cuts were a good thing or a bad thing. Your final thoughts.
Well, Jay Powell is a financial guy, and he understands that it's the debt service capability that is really the driver here. And that's why he's saying that if the economy grows faster than the debt, the ability of the U.S. economy to handle that debt is much more manageable. But I don't think he's endorsing a long-term deficit spending.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.